if you are ready to start investing in ETFs but still feel a little intimidated by them, this is for you, because I know many beginners freeze up when it comes to ETFs because they may seem complicated or overwhelming. And because of that, they end up leaving money sitting in a low interest account that's not earning them any money, or they go all in on stocks when they really don't know what they're doing, So in this video, we'll cover what ETFs are, how they work, how to pick them, my tips for beginners when it comes to ETFs, so that you can know exactly how to start investing in ETFs confidently today, not next year, today. And I will show you a real life example of how ETFs can grow your money over time, even if you're just starting with $50. And if you stay to the end, I'll reveal to you my top secret ETF tips for beginners so that you can save money as you continue to buy and build your investment portfolio. But before we get into that, hey girl, hey, my name is Joshlyn and I am the founder of Maximize Money, where I teach 9-to-5 earning women how to invest confidently in the stock market and grow their money with strategy, okay? No more guessing and hoping and wishing. We're doing it strategically, okay? So let's talk about what an ETF is and how it works. So an ETF stands for Exchange Traded Funds, and that allows you to essentially purchase a basket of stocks or bonds or a combination of both for one price. So think of Google, think of the top tech companies, Google, Meta, Netflix, Apple, purchasing all of them and having ownership into all of them for one purchase price. That is essentially what an ETF is, and that's why I love them, okay? And the difference between that and like a stock is, let's say you try to have ownership into all of those companies individually, but then they all tank the same day. That means that you're going to feel it. You're going to be stressed out and you're going to wish that you found an alternative that allows you to diversify, and that's what ETFs provides you with, okay? So ETFs also track an index. So an index is essentially, something like an S&P 500. And S&P 500 is tracking the top 500 companies in the US, so all of those companies I just mentioned are likely on that S&P 500, which gives you diversification. All things aren't going all in. All of your money is not going all in on Apple. You actually have visibility across 500 companies, and that's what VOO, which is a very popular ETF, actually does. They track the S&P 500. So I love ETFs, for that reason, and you can often get started with investing in ETFs for as little as $100, $200, So let's talk about why beginners love ETFs. Again, some of the benefits include the low fees. I just mentioned that you can get started with $100, $200, and you can even buy fractional, you can buy fractional stocks. I'm saying that incorrectly, but you can buy ETFs at a low cost, which means that you don't need tens and thousands of dollars. It also provides you with easy diversification. Again, having ownership, not full ownership. We're not looking to be Mark Zuckerberg here, but having ownership and shares across multiple companies gives you diversification. So even if Google is having a bad day, but Microsoft, Apple, and Meta is having a great day, you won't feel that pain too much because you have that diversification across multiple companies. It also allows you to trade, which I don't talk about a lot, but that allows you to buy and sell consistently at a higher price, lower price. But again, as a beginner, I don't recommend you start trading because that's a great way to lose your money if you don't know what you're doing. And then lastly, it allows you to automate your purchases. So like, let's say you're investing in an IRA, you can put money aside every single month to add more ETFs to your portfolio or buy more of what's already in there. So let's use a real life example because I love to see numbers and numbers convert, okay? Let's say you invested $100 a month in an ETF like VOO as an example, and it averaged 7% returns, which means that it grew 7% year over year, which is not far-fetched because the stock market historically returns 7 and 10% every single year, which means that your money is growing 7% year over year. So that $100 a month in an ETF like VOO, for example, averaging 7% of a return could grow to $60,000, over $60,000, depending on how the market grows in 20 years. Now, let's say you didn't do that, and let's say you put that $100 a month into your savings account for, 20 years, it will grow to $24,000. You see the difference? Do you want $60,000 or do you want $24,000 for doing the same thing? I guarantee you want the $64,000, and that's the power of investing, So if you are like, okay, this is great, girl, like I love it and I want to learn more, like, do you have any other beginner friendly, recommendations? And yes, I have a free course, a free crash course called InvestHER 101. It's basically a 20-minute video where I give you the what investing is, why it matters, different accounts out there, different types of ways to invest, i.e. stocks, bonds, things like that, in 20 minutes, okay? So all the knowledge that you wish you learned, you can learn in 20 minutes by clicking the link in the description. It's free, and I help you choose the best account for you to start with, which is of course going to be an IRA, but I show you why an IRA is better than some of the other options out there. And by the end of those 20 minutes, you'll know what investing is, why it matters, and how you can get started today, okay? So grab that in the link in the description. It is free, and I give you my free checklist for choosing the right IRA for you, because IRAs are not all created equal. So again, link in the description, and again, great for people that are super beginner, and it's like, okay, all of this you're saying is way over my head. Just click the link in the description, baby, and I'll get you together in 20 minutes, okay? So let's talk about the different types of ETFs that are out there, because all ETFs are not created differently. So now that you know why ETFs are great for beginners, let's talk about the main type that you'll likely see. Number one is an index ETF. So that's similar to VOO, which I just mentioned. VOO is actually an index ETF, and it tracks a specific market like the S&P 500, and that's real life. VOO, if you Google VOO, you'll see that it's tracking the S&P 500. I love these. I'm a big fan of index ETFs. Most of what I own as far as, ETFs are indexed because they track 500 companies, the S&P, but they also have other indexes out there like the total stock market index. I also have index funds for that. So it's just levels to this, but I recommend as beginners, you start with index ETFs because it gives you the most diversification. Again, if you choose a VOO, for example, you would have visibility across 500 of the top companies in the US, It's simple, it's low cost. It's not something you have to go in and individually purchase all of those 500 companies. One purchase gives you visibility into all of them. Next is a dividend ETF. And a dividend is essentially money that a company pays you for owning its shares, and these dividend ETFs are made up of companies that regularly pay them. So not all companies pay dividends. You have to do research and see what that's like. But essentially, this is just cash that you can get and reinvest it, meaning you can buy more ETFs, or you can actually have the money come to your account. And so dividend ETFs are also great. I don't have too many of them because I'm not too focused on dividends. I'm really focused on growth at this area of my life, but I highly recommend them right after ETFs, which is why I listed it secondly. The third ETF that you want to be aware of is sector ETFs. So VGT, I just talked about a lot earlier. Sector ETFs allows you to focus on a specific industry or sector. That can be technology, that can be healthcare, that can be energy. And it's a way for you to invest in a specific trend, So even if you're thinking of like AI and all this innovation, like NVIDIA is actually in VGT, So just to show you kind of the power of just investing smartly from the very beginning versus trying to own NVIDIA outright on its own, like it just makes more sense. So if you work in healthcare, if you work in consumer goods, and you know the industry like the back of your hand, sector ETFs might be a great example for you to start with. And then lastly are bond ETFs. So these are made up of bonds or other fixed income Bonds are fixed income securities. And so bonds essentially allow you to have a lower risk, because bonds are something that are often corporate backed or government backed, and they come with less risk and also potentially less reward, but they are the most stable out of all of these other ETFs I mentioned. So if I was talking to someone like my mom who's closer to retirement, she's going to be more interested in bond ETFs over, dividend ETF. Well, actually, no, she probably want that too. But she'd be more interested in bond ETFs and might prioritize them because they are stable, and she's closer to retirement and she wants something that doesn't have a lot of risk, for example. So I recommend that you have a combination of these. But as a beginner, I recommend that you start with, index ETFs, and get familiar with what those are. And then you can expand to some of these other ones. And then on future videos, I'll give you a breakdown of what my ETF strategy looks like. Because again, most of my money is in ETFs, index ETFs and dividend ETFs. But I do want to continue to actually, I do have VGT, which is a sector ETF. But again, start with one task. index ETFs and see what other ones are out there, so that you can actually, feel good about what you're investing in and not overwhelm yourself, okay? So now that we've talked about the different types of ETFs that are out there, let's talk about some common mistakes that people make. Number one, over trading. Trading is something I don't even want you to do, which is buying and selling your ETF. Don't do that. Let it mature over time, and don't sell anything for at least 1 year beyond you owning it. 2 is chasing hot trends. Just because somebody else is talking about how great, even though VOO is great, how great VOO is doesn't mean it's the best first step for you. You may say, actually, I'm actually working in tech and I need to be looking at a sector ETF like VGT, then you want to go that route, Ignoring the fees. There are often fees to purchase these ETFs. They're not free. So you want to make sure that you're paying attention to the expense ratio, which is essentially the cost that you have to pay to own the stock. And if you want a video on choosing the right ETFs based on my unique strategy, just comment below, because I pay a huge attention to the expense ratios. I don't just cover my eyes and book, I do the right research. And so if you want a video on that, just comment below. Lastly, another mistake that people make is that they think short term and not long term. Just because a ETF is down consistently, week over week, doesn't mean it's a bad thing. That's why you want to look at the full past year performance to see, okay, like how have they been performing last year? How have they been performing over 5 years? And that is what I personally recommend you do. Don't just be rushing to buy and sell, or rushing to buy something that you hear everybody talk about. Everything that I've given you is just an example. It is not financial advice. This is just visibility and education, okay? So when it comes to picking your first ETF, I'm going to give you some tips, okay? My secret tips, okay, of how to, pick the right ETF for your goals. Number one, think about what you have the most knowledge in. If you have visibility across all the top companies, focus on an index ETF. If you work in consumer goods, focus on a consumer goods-based ETF, which is a sector ETF. If you're a little closer to retirement, focus on a bond ETF, for example, And then I want you to think about, the expense ratio. The expense ratio matters so much. That's the cost it takes to own that stock. And if you are interested in that tip, as well as my other secret tips to investing in ETFs, just comment below. Comment secrets, and I'll know that I need to create a video on my top 3 secrets, because expense ratio and choosing the right expense ratio is key. You want to make sure your expense ratio is below 0.005. So that's my secret tip, y'all. But I have 2 other great ones that I'll share on another video if you guys are interested. But make sure that you research the expense ratio of whatever ETF you're looking for. And if it's not under 0.5%, do not buy it, okay? That's just my secret tip. If you want more of those, if you want me to do a full video on my top secret tips, I have 3 that I follow that help me to choose the best ETF. Just comment secret below and I'll be sure to provide that video to you guys. So again, if you stay to the end, you know that my favorite account to invest in is an IRA, and you know that I love index-based ETFs. Follow immediately by dividend-based ETFs. And when it comes to ETFs, my secret to choosing a great one, just one of many secrets, is to pay attention to the expense ratio. Make sure it's under 0.005%. Otherwise, it's too expensive for you to own, okay? So if you have any questions, please leave them below. If you want to learn more about investing, you need a crash course on all things stock market investing, click the link in the description for InvestHER 101, which is my free 20-minute video series on investing for beginners. It gives you all the baseline understanding and knowledge that you need about the different accounts, the different investment types out there, why investing matters, and what happens if you do not start investing, i.e. your money is losing its value every single day. So if you want hands-on support as well, I do offer InvestHER Live, which is a live virtual workshop where we invest as a community together live. You invest your first $100, okay? We do that together. So it's going into an IRA. You're investing that $100. with confidence. I'm going to give you my secrets for real. We're going to be screen sharing. We're going to be asking questions, and we're going to have a system to do that $100 investment every single month. So the wait list for that is in the description. Or if it's already coming up, depending on when you see this video, it's happening at the top of 2026. So click the link in the description for that. I'm very excited to help you get your wins, help you start investing, because our money is losing value and we are working too hard for it, okay? So thank you so much for watching. Please like, comment, share, subscribe. And if you are interested in more investing videos, or if you're like, okay, girl, what video should I watch next, okay? Watch my common lies that you've learned about investing in the stock market video that will be popped up on the screen at some point already. So I'll see you guys on the next video. Let's get this money and grow it.